Okay, so when we talk about topic number 9, that is budgetary control. Budget has got so many things. So initially, before the review of the syllabus in 2021, topic number 9, that is budgetary control, standard cost and variances was actually one topic. So after the review, it was now split into two, whereby we have now the budget part. We now have the budget part being a topic on its own. And of course, standard costs and variances. Standard cost and variances was also split to be a topic on its own. So our area of focus today will be budget, and under budget, number 1 will be giving us definition. Definition, we'll be defining budget. We will be defining budget. What are some of the importance of factors that we need to? The benefits of having a budget as a company, the benefits of having budget as an individual, right? So we talk about importance of benefits or advantages of budget. We will be talking about budget committee. So these are still theories, of course, I shared with you. Budget committee, why should we have budget committee? And what are their responsibilities? Then, of course, we must also talk about disadvantages. Disadvantages of a budget. Disadvantages of a budget. So for you to come up with a budget, of course, you'll have to look at so many things. You'll have to look at so many things. You'll have to check at so many things. Good, so are you getting me from your side? Are the rest getting me? Confirm whether you are getting me perfectly from your side. Okay, so Faith, you can check on your network. Good, after disadvantages of a budget, we are now going to look at the types of budget, right? We are going to look at the types of budget. So budget, the major categories here, we will be looking at what we call master. So we have the master budget, we have master budget, right? Then from the master budget here, there are some functional budgets within the master budget where we'll be talking about purchases, right? Actually, we'll be able to start from sales budget. Don't be surprised that you get a question telling you to give us the correct order of the master budget. So talk about sales budget. From the sales budget, talk about production or even usage. Talk about usage budget, material usage budget. For material usage budget, you give us production budget. From the production budget, you'll be able to give us what we call purchases budget. And of course, from that, you can now give us what we call overheads budget. From all these, you are having functional budgets. But remember, you must tell us the source of money. Do you have that money? Right? So you now give us what we call cash. That is where cash budget comes in. Good. Again, within this particular budget, you will be telling us something to do with, yes, you are doing production. Maybe you are doing production of items that are normally produced in batches, right? Or as a single product. So as you do the production in batches, there are some expenses that normally depend on the units of output. There are those expenses that are normally constant or fixed over the production duration or within a given range of output. And therefore, we will be talking about flexibility of your budget. So we'll be telling us about flexible, stroke flexed budget. Good. So this is what you're supposed to do, or this will be what you'll be able to do under this particular topic. Of course, when you now advanced management accounting, we will be introducing something to do with zero-based budgets. That will come later at advanced level, right? We're talking about activity-based budgets, which of course, indeed at this level, under topic number 5 ABC. So they are replacing letter C with the letter B. That is what they are doing at advanced level. Then of course, we talk about incremental budget. So these ones here are part of what we'll be doing at advanced level, whether you are currently taking ATP or CPA. Under the assumption that all of you, which I believe is the case, none of you will be exempted from taking advanced management accounting, now that is a compulsory unit at advanced level. Good. So this is what you're going to look at. Remember, from the budget, that's when you're going to look at now the standard cost. Maybe if I don't have standard cost, I'm talking about estimates or budget. So in most cases, you find that you must have budget under topic number 10. That's why it's advisable we deal with budget first as an independent topic under topic number 9, so that when we get to topic number 10, we are not going to struggle. We will be basically focusing now on variances. We will be focusing on variances. Now that I was able to give you, or I've been able to post the notes in LMS in advance, I don't think that advisable that you take again this limited time to start defining budgets, to start mentioning or writing down advantages of budget, right? To start looking at the advantages of budget and all that. I want us to go to at least look at the components of this master budget. Okay, so you'll give me something like 5 minutes to do that. You'll give me 5 minutes to check on that audio. So I've said we need to define what a budget is. We need to define what a budget is. So budget is defined as a financial and or quantitative statement prepared and approved prior to defined period of time of the policy to be pursued during that particular period for the purpose of attaining a given objective. So budget may include income, expenditure, and the employment of capital. That is the resources. So under income, we look at how you're going to collect your revenue, or even how you're going to gain that revenue in the first place. Are you going to offer services? Are you going to sell physical goods, right? So that's now the source of revenue. So let's talk about revenue. You must also tell us at what exact time are we going to receive this revenue? Yes, you are making sales. Does it mean you'll be receiving payment after 1 month? Does it mean you'll be receiving payment after 2 months? That's now the actual cash, which of course will be addressed under what we call cash budget. For example, for your case, when you are paying your school fees, right? You are normally allowed maybe to pay at least half as you start your classes, and of course clear the balance after 30 days. So RCM cannot say if they have like maybe 100 students at the beginning of the semester, and let's say everyone has paid half of the total fee, they can talk about having all that amount. No, they talk about what they've actually collected at the time of registration, right? So total revenue does not mean you're actually going to receive cash equivalent to that amount. It depends on the policy of the company on debt collection or receipts from sales. Now, from the definition, we'll be looking at maybe why do we need to have a budget? Why do we need to have a budget? There are 4 important essential features of a budget. Number 1, budget is a comprehensive and coordinated plan for actions, and it is based on the objective which the enterprise aims to achieve during the plan or budget duration. Budget is expressed in quantitative and financial terms. Yes, we talk about total sales, we talk about cost of sales, we talk about expenses or overheads. Are you able to give us the actual amount? That's now what is addressed under the second feature of budget. Number 3, budget is a plan for the operations and resources of the company, right? So of course we have employees here, we have time dedicated to do production, we have time dedicated to do sales. All that, of course, falls under the resources of the organization. Then budget is always for a future specified period. You're talking about a budget for the next financial year. You are talking about a budget for the next quarter or the next 3 months. So that is another budget. Then now the importance or application of a budget. So let's see what we have here. I hope you actually have those notes with you in a summarized manner, right? In a summarized manner. So I don't have to go through all this. Let's just look at some of the types of budget. Now, the types of budget we're talking about, we have weekly, we have monthly or quarterly budget. We are having annual budget, the long-term budget. Then what else do we have here? A lot of stories there. Now, this one here, I think is in one of the past paper questions, this section here. The objectives or purpose of a budget or of budgeting. So one of them is to state clearly and ambiguously the targets for the different budget centers and also for the whole company. Then to communicate to different heads of budget centers about what they are required to achieve. Then, of course, it is also a motivating factor because with a budget, if you have said we have to sell 50,000, upon selling the 50,000 units, you've actually achieved the target of the company, and therefore you have actually fulfilled what you are assigned to do, right? Also, it's also a tool that is used to do performance evaluation for different departments, for different individuals. It can also be used for training, right? In classification of budgets, for functional classification of budgets, we talk about the classification of budgets or the functional section, where we'll be talking about now the sales budget, the production cost budget, the production budget here, material and or purchase budget, the overhead budget, capital expenditure budget, and of course the cash budget. When you combine all that together, it will give you what we call the master budget. It will give you what we call the master budget. Now, the sales budget, that one I'll be able to define when we do a practical question under it, the sales budget, production budget, and all that. So I think that marks the end of those stories, and we are getting away to calculations. So can we go to the first question we'll be doing is August 2025 from CPA. August 2025 from CPA sitting. It is there in the list that I shared with you. August 2025 CPA past paper question. August 2025 CPA past paper question. August 2025 CPA past paper question. Confirm whether you've been able to access it. Confirm. Confirm. August 2025. That should be the last question, question number 3B. August 2025, question number 3B. Remember, I also went ahead and shared with you a comprehensive summary of all the past paper questions. So you not having this is a choice. You not having all that information, it is a choice not to. It's a choice of not. Okay. Just a minute. We have got a summary of all the past paper questions from both CPA and APB. From CPA and APB. The question I'm talking about is this one here, August 2025, question number 3B, falling under functional budget. Falling under functional budget. So I believe you've been able to actually see what is happening there.
I hope you've been able to see what is happening there. I'll be able to drop my screen and then we look at the question together. Perfect. Now, when we talk about functional budget, remember there's an order. So if you look at the summary for the ATD past paper questions, I have been able to put something there. One of the sittings, I think it is in the last sitting or April 2025, they were actually requesting you to give us the order in which you'll be able to do a budget. So for example, if you go to a company, you cannot come up with a budget by starting to give us what you're supposed to produce or what you're supposed to purchase. You cannot start from purchases of raw material. No, you cannot start from purchases of raw material. If you start from this point, then automatically you are sorry. It means the procurement team cannot just wake up and tell us we are going to procure this number of raw material and you have to receive them on on this particular day. No, they are not supposed to do that. The purchases budget must originate from the sales team. It is the sales team that tells us, you know what, based on what we were able to sell last time, based on what we were able to see as per the demand of this particular product, we are anticipating that this number of units will be sold in the next financial year, will be sold in the next quarter. Then from there, you'll now be able to tell us what do they want to keep, what do they intend to keep as their closing inventory. At any given time, they are going to do what? They are going to make sales. They must have maybe some for any unplanned demand out of what they normally know as unexpected demand. What if they get a special order? What if they get a special order? How will they address it? Will they address that special order? Video. You able to see my screen from your side? I mean my board. You able to see the board from your side? Okay, thank you. So the order, which of course we are answering a question from the ATD past paper questions, you start from sales budget. You start from sales budget. Now, from the sales budget, you'll be able to tell us what they intend to sell in the next financial year. After the sales budget, remember, these goods have to be produced. But even before you go to the production, yes, they have a specific quantity that will be sold, but they also have intended closing stock of the finished product. Intended closing stock of the finished product. So now tell us, you also have to give us what we call intended closing stock goods. Again, you have to be specific. As we talk about closing stock, we are going to deal with the two things at the same time. We are going to deal with the finished goods and also raw material. So you have to be specific. What is this closing stock? It can be closing stock of work in progress, closing stock of finished goods, or what closing stock of raw material. So here I think about closing stock of finished goods. Now, with the intended closing stock of finished goods, you'll be able to give us what we call production budget. But of course, there's also what we call the existing opening stock of the finished goods. So if you want to talk about the specific budgets will give us the sales budget. Then from the sales budget, you will tell us the production budget. Of course, you tell us here the production budget. You cannot do production before you know what you're supposed to produce from the sales budget. Then, of course, now, after knowing what you're supposed to produce, it is the production department that will tell the procurement team what they want to be purchased for them. So we talk about purchases budget. Then we now bring what we call production overhead, and of course, Talk about labor. So labor budget, so direct, very simple. Then you give us now production, overhead, budget, production overhead budget, right? Once we have that in place, we are able to come up with what we call now budgeted income statement. So that will come later. All this combined plus a special budget called cash budget will give us what we call master budget. Will give us what we call master budget. Will give us what we call master budget. But these first ones, these ones here, we call them functional budget. Functional budget. So master budget combines everything, including the short-term budget, the long-term budget. All of them will be falling under master budget. So our first question to understand this concept is we can start with the CPA. Good. So what are we being told in this particular question? What are we being told in this question? Question number 3B. So Z Limited produces a single product. Estimated sales for each quarter or each quarter next year will be as follows. So we have quarter 1, quarter 2, quarter 3, quarter 4. Maybe in your exams, these quarters will be referred to as now months. Maybe month 1, month 2, month 3, all that, or the specific name of the months. Additional information, the opening inventory of finished goods is estimated to be 10,000 units, and the company expects to maintain the closing inventory of finished goods at 16,250 units at the end of the year. Production pattern in each quarter is based on 80% of the sales of the current quarter and 20% of sales of the next quarter. Production budget or pattern, right? So what you're supposed to produce was already given to us there as a percentage. Then number 3, the opening inventory of raw material in the beginning of the year is estimated to be 10,000 kilograms. And closing inventory at the end of the year is required to be maintained at 5 kilograms or 5,000. Each unit of the finished output requires 2 kgs of raw material. The company proposes to purchase the entire annual requirements of raw material in the first 3 quarters in the proportion at the prices shown below. So we have now the purchases of raw material given there. Required, the production budget in units for each quarter. Number 2, raw material consumption budgets in quantity for each quarter. Number 3, the raw material purchases budget in quantity and value for each quarter. Are they talking about sales anywhere? Yes, we have the sales budget. So I want us to do that. Let us have the quarters here. That is 1 to 4, quarter 1. So let us have quarter 1, 2, 3, 4. Then we are talking about sales budget. Good. So let's start with sales in quantity. Sales in quantity for the first quarter. We have 30,000 in units, 30,000. We have 37,500. We have 41,250. We have 45,000. Good. That is our sales. That is our sales budget. Now, do we have budgeted selling price per unit? Because you can be told to give us sales budget both in units and also in shillings. So in most cases for units, you'll be copying, except in one of the mock papers that was done by your colleagues, I think in last semester or April 2025, there was a mock that was given to them, of course, internal one. You are not given sales in quantity. You are to work out your way to get the quantity. I wish you could be able to have time and at least look at that mock at your free time. Are we given budgeted selling price per unit? Are we given budgeted selling price per unit? Yes or no? Budgeted selling price per unit from the additional information. Do we have anything about the budgeted selling price per unit? We don't have, right? So if you're not given that, it means our sales budget will stop at sales budget in terms of units. Now, after that, can we now go to what we call material usage budget? But that will come later. Why? Because we have to know what they are going to produce. Apart from the material usage budget, we must get to know what they want us to do here. We must read everything. There's some that are dependent on the number of units to be sold, especially the purchases budget. Especially the purchases budget. So let's look at it together. Let us look at it together. Good. So they're telling us here, information number one, opening inventory of finished goods is estimated to be 10,000 units, and the company expects to maintain the closing inventory of finished goods at, the opening is 10,000, but they are intending to maintain the closing at what units? At 16,250 at the end of the year. Production pattern in each quarter is based on 80% of the sales of the current quarter and 20% of sales of the next quarter. So let us come up to the production pattern. Let us go to the production pattern. Production. Can we get the production for the first quarter? It is 80% of the current quarter's sales and 20% of the next quarter's sales. So what is 80% of the current quarter sales? It means our production for quarter one will be 80% of 30,000, right? Plus 20% of 37,500. What I'm getting as the production in units for quarter one. What is your production in units for quarter one? What is your production in units for quarter one? Somebody, 80% of 30,000 plus 20% of 37,500. What are you getting? What are you getting there? What are you getting? $31,500, right? So we have 31,500. Good. Then the next quarter, 80% of 37,500 plus 20% of 41,250. What are you getting? 38. The board is not clear. Somebody is talking about the board not being clear. Is it affecting everyone? Is the visibility of the board affecting everyone? It is clear. Another concern here. Is another concern. Okay, good. So that's giving us 38 to 50. 38 to 50, 38 to 50. 38 to 50. So that's what we bring here. 38 to 50. Good. Then what about the third quarter? It is 80% of 41 to 50 plus 20% of 45,000. What are we getting? 80% of 41 to 50, that will give us 42,000. That will give us 42,000. How about the fourth quarter? 80% of 45,000 plus 20% of the sales in the fifth quarter. So what are we having for the fifth quarter here as budgeted sales? Is there anything given to us about the budgeted sales in the fifth quarter? Do we have budgeted sales in the fifth quarter? We cannot say that it is zero. No, we cannot assume that it is zero. There must be some information that will help us to actually get that answer. So it is not a zero. Don't assume. It means we have an unknown figure here. There's some gap here, which we need to take care of. Good. Let us continue reading the question and you'll be able to understand what is happening. So that's the production budget, right? Now, how do we normally get the production budget? That is the next thing. How do we normally get the production budget? We have talked about sales budget, which of course is just as simple as such. Now, for us to come up with a production budget, this is what you're supposed to do. If you are to talk about production budget, you first of all give us what we call material usage budget, right? So material usage budget is the quantity of raw material required to fulfill the production. Is the quantity of raw material required, to fulfill the sales or the demand for the entire year or each period. Now, go to our question, because this one is still missing. So we can talk about material usage. What is needed just to fulfill the sales. Now, material usage budget. Are we given any information talking about the quantity of raw material required to produce a unit of the finished product? We given any information talking about the quantity of raw material required to produce the quantity of the finished product. Note number 3. Let us go there together. Note number 3. So note number 3 is telling us, we are being told here that the opening inventory of raw material in the beginning of the year is estimated to be 10,000 kilograms, and closing inventory at the end of the year is required to be maintained at 5 kilograms. No, it is not talking about that. Note number 3 is not giving us that. Note number 4. Each unit of finished output requires 2 kgs of raw material. Now, they are going to sell 30,000 in quarter 1. Are we able to give the quantity of raw material needed to fulfill the 30,000 units demand? So you take 2, multiply by the quantity to be produced or to be sold. 2 by 30. 60,000. So I'll be able to see the trend, 60,000. Then what about 2 by 37,500? 2 by 37,500. 2 by 37,500, 75,000. 2 by 41, 250. 82,500. 2 by 45,000. That will be 90,000. So already we have material usage budgets. Already we have material usage budgets. Now, from our question, there's another information talking about the intended closing stock. There's another part talking about the intended closing stock, the opening stock. So what are they telling us about the intended closing stock? What are they telling us about the intended closing stock? What are they telling us about the intended closing stock? Somebody to assist us here. Intended closing stock. Intended closing stock. To be maintained, 16 to be maintained. So that's the closing stock, right? It should be maintained at 16, at 16,250. Now, after getting this, we also need to get what do they have as the opening stock of raw material? What is the opening stock of the finished goods? What is the opening stock of the finished goods? What about 5,000 kgs? Good. Somebody's confusing two things here. We are talking about finished product and raw material. Finished product and raw material. Finished product and raw material. So when you talk about kgs, you are referring to raw material. When you talk about units, you are referring to the finished product. As per this particular question, that's what I can be able to see there. As per our question, we are talking about raw material and finished product. Raw material and finished products. I hope you are getting what is happening. Right? Good. So somebody to give us now the material usage budget for quarter 4. Material usage budget itakuwa ngapi? Material usage budget for quarter 4. Material usage budget for quarter 4. Material usage budget for quarter 4. How do we get that? We must have what we call production budget. So the production budget is normally, how do we come up with the production budget? Production budget on its own is normally sales budget. So we have our sales budget. To the sales budget, quarter 1, quarter 2, quarter 3, quarter 4, right? To the sales budget, they are intending to sell 30,000. They are intending to sell 37,500. They are intending to sell 41,250. They are intending to sell 45,000. To the intended sales budget, to the sales budget, they also have what we call intended closing stock. So we talk about closing. We add closing stock. So can somebody give us the closing stock for the first quarter, the intended closing stock of quarter 1? Intended closing stock of quarter 1, or which information is telling us anything to do with the intended closing stock of finished product in quarter 1? Intended closing stock of the finished product in quarter 1. Somebody. What are we having there? Information number one. Okay. Let us see what information number one is having there. The opening inventory of finished goods is estimated to be 10,000, and the company expects to maintain the closing inventory of finished goods at 16 units at the end of the year. At the end of the year. Remember, we are dealing with the last quarter of the last quarters of the year, right? So at the end of the year, at the end of this fourth quarter, the intended closing stock should be 11 of the finished product. That is 16 to 50. 16 to 50. That is the intended closing stock. Don't forget that we will be talking about, so this one here, closing stock minus opening stock to give us the production budget. To give us production budget. Good. So we have 16,000. We have 16,000. Now, at the beginning of the year, we have 10,000. At the end of the year, we have 16,250. If this is closing stock for quarter 4, is there someone who can give us opening stock for quarter 3? Closing stock for quarter 4. So the closing for quarter 4 becomes the opening for quarter 5, right? Now, because we are only ending at quarter 4, we are not intended to go up to quarter 5. We are not intending to go up to quarter 5. So can somebody give us anything that relates to this? Any information? Any information that will also guide us there? Any information that will also guide us there? Any additional information that will also guide us there? Any information? Any information that will guide us there? We have opening stock. Opening stock, 10,000, right? Opening stock is 10,000 here. And we need to less the opening stock. Do we have production budget of quarter 1? Production budget of quarter 1 is 31,500. 31,500. 31,500. What are we lacking? We are lacking closing stock in quarter 1. So can you get that? If you have 30,000, right? If you have 30,000 plus the closing stock, which we do not have, plus the closing stock, which we do not have, minus opening stock, which is 10,000, we should be having 31. We should be having 31,500. We should be having 31,500. Now, can we get the value of X? Can you get the value of X? Everything will post the equal sign, and of course, we have X. The other side. So we have X is equal to 31,500 plus 10,000. This will be a plus. Then, of course, minus 30,000. What is the value of X, which is the closing stock in quarter 1? What is the value of X, which will be the closing stock in quarter 1? 11,500. So that is 11,500. Right? The closing stock in quarter 1, does it have any value in quarter 2? If yes, where will we record it? The closing stock in quarter 1, is it having any value in quarter 2? If yes, where will we record it? So the closing stock of quarter 1 becomes the opening stock of quarter 2, which is 11,500. Do we have production budget in quarter 2? Yes, 38 to 50. The same thing. So come here and give us what is required. Give us the closing stock. So 38 to 50 is equal to 38 to 50 is equal to sales budget 37,500 plus X minus 11,500. So can you get the value of x? So x will be equal to 38,250. This will be now a minus 37,500. This will now be a plus 11,500. What is the value of x? 12,250. So we have 12. The closing stock in quarter 2 is the opening stock in quarter 3. So we have 12,250. 12,250. Good. 12,250. Do we have budgeted production in quarter 3? 42,000. Do the same. So I have to do the same and give me the value of closing stock in quarter 3. What is the closing stock in quarter 3? Closing stock in quarter 3. 13,000. Thank you. 13,000. Which will be the opening in quarter 4. So we have 13,000 here. We have 13,000 here. They told us that the intended closing stock in quarter 4 is 16,250. 16,250. What are we lacking? What are we lacking down there? We are lacking production budget. We were not able to get the production budget. So can you give me the production budget in quarter 4? Give me the production budget in quarter 4. 48,250. Are you getting the production budget? So production budget is equal to intended sales, the 45,000, plus intended closing stock of 16,250, right? Minus opening stock of 13,000. This should take you to 48,250. There you are saying it there. 48,250. The moment you get 48,250, your next step will be to bring us here and now give us the production budget of 48,250. Will give us 48,250. So have you been able to see how we are supposed to get this figure? Initially, you were able to see it was 80% of this plus 20% of the next duration's sales. But because you are not given intended sales for the 5th quarter, right, or the 5th duration, we were not able to move forward. And of course, under additional information, we were not given anything about the budgeted sales of quarter 5. So what are we supposed to do? We were to take this approach. We were to go to the production budget formula, and you can see it has been able to give us what you are missing. It has been able to give us what you are actually not having. Good. So we now have our material usage budget, it is there. Production budget, it is here. So what do we need to do? We now need to go to purchases budget. We now need to go to what we call purchases budget. So let's go to purchases budget. Purchases budget. So purchases budget, I'll bring quarter 1, quarter 2, quarter 3, quarter 4. As I come up with the purchases budget, you first of all take the production budget, right? So the production budget, we have this 31,500 units of the finished product. Units of the finished product. But remember, the material usage budget is only used to produce what's supposed to be sold. Remember, we were told 1 unit of the finished product requires 2 kgs of the raw material. So our material usage budget is normally just sufficient to fulfill the demand or sales. It does not include the intended closing stock, right? It does not include the intended closing stock. So to the material usage budget, we need to add what's supposed to be actually produced, right? So for us to fulfill what is needed here, what's supposed to be sold, this is what we have, right? This is what we have. Now, under purchases budget, we bring in material usage. To the material usage, we add intended closing stock. Then we less the existing opening stock. Then we less the existing opening stock. So are we together up to that point? 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 Are we together? Are we together? Great. Another way, remember, if material usage is only giving us what will be sold, but already in our workings, we have the budgeted production. Now, yes, they are going to produce 31,500. What will be sold is only 30,000. Out of that, they already have an existing stock of 10,000. Somebody is not getting this. Somebody is not getting this. RCM has estimated that in the semester of September, December 2025, this current semester, RCM has estimated that for the revision kit, management accounting revision kit, right? Revision kit, we are going to sell 30,000 copies. We intend to sell 30,000 copies. We cannot just do production of exactly the 30,000 copies. What if someone else comes for this book apart from our students, right? Maybe another college can come for the books, another university can come for the books, or an individual who is training somewhere can come for the books. Remember, the 30,000 we're talking about here is for the students who are in the management accounting class. So we know we'll be able to sell 30,000 copies as per our estimate. But now, we also need some closing stock. We want to say, yes, 30,000 will be sold to these students. What if someone else comes in? That's now where our intended closing stock comes in. So intended, we normally call it intended closing stock. So our intended closing stock, we want to have 11,500 copies at any given time. 11,500 copies at any given time. How many books do we need? We need 41,500 books at any given time. So if we are going to do production, we need to produce 41,500. But remember, it is not the first time we are doing this. If we go to our store, we are finding out that already there are some books in the store at the beginning of the semester. So our opening stock, we need to less opening stock. In the store, we already have 10,000 copies. If what is needed is 41,000, are we really going to produce the entire 41,500? No, we cannot produce that. Why? Because yes, we need 41,500, but already in our store, there is 10,000 copies. So can somebody give us the actual units we are going to produce to fulfill the entire equation of this demand and the intended closing stock? How many copies are you supposed to produce to meet this demand? In that simplified manner, are you able to tell us what you're supposed to produce? Somebody to help us there. What is needed for the entire semester is 41,500. How are we getting that figure? What we'll be selling to our students plus what we intend to have for other customers. It is 41,500. But if you go to our store, we already have 10,000 copies. So it means actual production is 31,500. 31,500, right? Good. I have a very simple question to you. And my question is, if I am going to purchase raw material to do production, will I purchase raw material that will be sufficient to produce the 41,500 books or to produce the 31,500 books? I'm going to purchase raw material to produce books. Will I go for the material sufficient to produce the 41,500 or 31,500? It will be raw material required to produce the 31,500. Why not 41,500? Yes, we need 41,500, but only 10,000 units are there. So our actual production is 31,500. So our material usage budget will be for the actual production. This is where our material usage budget will come from. That is where our material usage budget will come from. So we should be able to replace these figures here. It should be now production, right? You can see how we are getting the 31,500, and you can see it here. So our material usage budget is 31,500 times raw material needed per unit. Right? Yeah, so I want us to just replace that. Why are we adding the closing stock? Why are we adding the closing stock? Now, our friend here is having a question. We know that we are going to sell 30,000 units. That one will be sold. We will not have it anywhere. What if someone else comes for the books? This person will be coming, is not part of the 30,000 copies, or is not part of these people purchasing the 30,000 copies. So apart from what we'll be producing and will be sold directly, we also need to sell to other people, right? In other words, you are doing sales. You've been able to get a contract, right? You've been able to get a tender. If you have a tender, yes, you'll supply that, but you will not send your usual customers that, you know what, I've been given a special tender here, so I don't need you anymore. No, you will serve your current or existing customers and also fulfill the order. Now, your current customers, they need, or this special order, you are supposed to sell 30,000 units. But should you find someone else who is not part of your current customers, you are now giving them 11,500. In any case, they'll be able to come. You are able to sell to them the 11,500. So the total goods you need for this particular month, for this particular year, is what you'll be selling to your customers plus what you are intending to have for the special customers. The total goods you need for this duration is 41,500. That is what you need. So if you're doing production, you need to produce this. If you're not doing purchases, you need to purchase the 41,500. Now, this company is doing production. Again, I cannot go ahead and produce 41,500 yet in my store already there is 10,000 copies. If I produce exactly 41,500, I will have excess of 10,000 copies without any market. So I cannot produce the 41,500. I'll take 41,500 minus the existing stock. Is it making sense now? Does that respond to your question? Thank you. Now, the quantity of raw material that will be needed to just fulfill that demand is what we call material usage budget. And it will depend on this quantity here, the production budget. So it means our material usage budget is the quantity of raw material times the production budget, not this. So sorry for that. We should be able to change that to the quantity we are going to produce. So can you take 31,500 by 2? 38,250 by 2, 42,000 by 2. I'll be able to give you this as 84,000. Remember, this is kgs, right? 31,500 will be, is it 63? This should be 63 if I'm not wrong. 38,250 by 2. 38,250 by 2. 76,500. Then 48,250 by 2. 96,500. Good. So that's our material usage budget. When you now come to purchases budget, the first thing we need to record there is material usage budget. Material usage budget. Our material usage in the first quarter is 63,000. Second quarter, 76,500. 84,000. 96,500. Now, the production team has also been influenced by the behavior of the sales team. Why am I saying so? The production team will not accept to only have the quantity of raw material sufficient to fulfill production budget. No, they also intend to have some closing stock somewhere so that should they get a special order to fulfill, they can easily do the production. So that is why the behavior of the sales team here will automatically be transferred to the purchase and to the production team. Right? Now the production team will say, okay, you want to avail 63 kgs of raw material to be able to fulfill the production budget of 31,500. We also intend to have some closing stock of raw material, and we should add it here so that as the procurement team gets to purchase the raw material, they must include our intended closing stock. So can we now come here and add closing stock, this time round of raw material, closing stock of raw material. Remember, you are purchasing, even from the title, you don't purchase finished product, you purchase raw material. So go to our question. Which additional information is talking about the closing raw material or closing stock of raw material, or any additional information close to that? Information number 3. Let us look at it together. Let us look at it together. Information number 3 is telling us the opening inventory of raw material in the beginning of the year is estimated to be 10,000 kilograms, and the closing inventory at the end of the year is required to be maintained at 5,000. So this closing stock at the end of the year is supposed to be 5,000. And at the beginning of the year, the closing stock in the first quarter is supposed to be 10,000 kgs. Now, with that, we also supposed to do what? Less opening stock of raw material. Then it will give us what we call purchases. It will give us what we call purchases budget. It will give us what we call purchases budget. Are we moving together? Are we moving together? Are we moving together? Now, there is some gap here which we need to take care of. There's some gap here which we need to take care of. That first gap, so we have 10,000 here. We have 10,000 here. So it will be 63 plus 10,000 minus some amount here to give us purchases budget. What will be purchased? But now, we cannot work with 2 unknown items. We must just have one unknown item. There is no way we can get purchases budget without opening stock, right? But we can get opening stock without purchases budget, and these ones are available. Or, in other words, these two items are not known. We must have one of them to get the other. We must have one of them to get the other. I'm told it's supposed to be opening. Thank you. Supposed to be opening. Good. Now, the next thing is, are you able to see any additional information that will guide us on getting either purchases budget or closing stock of raw material? There's some information there. There's some information there, so please help me get it. Information number 5. Thank you. Now, information number 5 is telling us that the company proposes to purchase the entire annual requirement of raw materials in the first 3 quarters in the proportion at the prices shown below. Now, in our question, were we given annual demand? Were we given annual demand of raw material? Total raw material needed, were we given that? Yes or no? Raw material needed for the entire duration. Are we able to get it? Not given, but we can get it. How can we get it? There's that part of material usage budget. Right? There's that part of material usage budget. So we are being told that we have quarter 1, 2, and 3, then percentage purchase of raw material. Percentage purchase of raw material. The first thing you need to give me is the total raw material needed for the entire year. Once you give me that, we'll be able to get what is supposed or what was purchased in the first quarter, second quarter, and third quarter. So can somebody help us there? Total raw material. Total raw material. Total raw material. Total raw material. $320,000. Are you getting the 320? How are you getting the 320? 315. Okay. How are we getting these figures? How are we getting these figures? How are we getting the 320, the 315? $320, $350 tunapata aje? Can I give you a secret or an hint? Now, we are being told that what was demanded for the entire year was to be purchased within how many quarters? Within the first 3 quarters of the year. So what does it tell you? We are dealing with the 4 quarters here. Now, the last quarter of the year is this quarter 4. The last quarter of the year is this quarter 4. Are we going to record any purchases in the last quarter? Will we record any purchase in the last quarter? Will we record any purchase in the last quarter? No. So our purchases budget in the last quarter is equal to 0. Our purchases in the last quarter will be equal to 0 because we're supposed to do purchases in the first 3 quarters of the year. That is quarter 1, quarter 2, quarter 3. That is it. Now, if already you have been given the last figure here, purchases budget as 0, we can easily get this missing figure because purchases budget, which is 0, is normally equal to, right? Material usage budget of 96,500 plus intended closing stock minus opening stock, which is X. Can we get the value of X? So it means X is equal to 96,500 plus 5,000. What is the intended opening stock of raw material in the last quarter? Intended opening stock of raw material in the last quarter. 105, 500. Good. So that is 105. 500. Is it 105 or 101? 101, 500. Great. Are you now able to see an opportunity here? Are you able to see an opportunity there? The opening stock of quarter 4 should be the closing stock of quarter 3. Opening stock of quarter 4 should be the closing stock of quarter 3, right? Perfect. So what do we need to do? We need to come here and talk about closing stock of quarter 3, which is 101, 500. 101, 500, right? Good. That is what we are. Are we able to do anything? Are we able to do anything there at that point? Are we able to do anything with that information? Please repeat. Which part should I repeat? Which part should I repeat? Good. Are you conversant with the value 0? As I repeat, are you conversant with how you're getting this 0? Are you conversant with how you're getting 0? Let us read information number 5. I think it will give you some guidance. Number 5 says that the company proposes to purchase the entire annual requirement of raw materials in the first 3 quarters in the proportion and at the prices shown below. The company has proposed, yes, we should be having purchases budget for the 4 quarters, but the company has decided to do all the purchases in the first 3 quarters. What does it tell you in the 4th quarter? We will not have purchases budget. It will be a 0. So that statement is telling you purchases budget in the last quarter is a 0. That's how I got to this figure. And we said we cannot solve a question with 2 unknowns. Now we have a 0, but you are not having opening stock. We come up with this question here. Our purchases budget, how do we get the purchases budget? It is material usage plus intended closing stock minus opening stock. It gives us purchases budget. So material usage of 96,500 plus intended closing stock of 5,000 minus opening stock, which we do not have, is equal to 0. Can we make X the subject of the formula? So this X will cause the equal sign to be a positive. This will cause the equal sign to be a negative, but it is a 0. It does not have any effect. So can we group this together? 96,500 plus 5,000, I'm told is 1,500. That's why I go to 1,500 as the opening stock of raw material in quarter 4. The opening stock of today is the closing stock of yesterday. The opening stock of quarter 4 is the closing stock of quarter 3. Is it making sense to somebody now? Is it making sense to somebody now? Great. Now, we have closing stock as 1,300. Right? We do not have opening stock in quarter 3. We do not have purchases budget in quarter 3. We need to get one of these 2, then we get the other one. So what is the direction we are going to take? What is our next point of action? Somebody, if you're able to follow through at least. Is there any additional information that will give us another int? Is there any additional information that will give us another int? Any information? Because you also have to keep the rule. These purchases were to be done in how many quarters? In the first 3 quarters. In what proportion? Note number 5. So the percentage of raw material, purchase of raw material. So we have 30, 50, 20. We have 30, 50, 20. Purchases. Okay. So can you please help me get one of these two, either opening stock of raw material or purchases budget in quarter 3? Somebody to help me there. Somebody to help me there. The moment you'll be able to understand what we are doing here, you don't have a problem with the functional budget, because this is the extreme part of it. Somebody to help us there. What are we going to have? What are we going to have? What are we going to have? Is it the opening stock or purchases budget in quarter 3? Is it the opening stock or purchases budget in quarter 3? Good. So can you first of all get total material usage? What is your total material usage? 64,000 purchases budget. How are you getting the 64? How are you getting the 64? So if you're getting 320, I hope you have added, okay, you have added everything. This plus this plus this plus that. It's giving us 320 now. Can we get, based on that proportion, what are we supposed to have in quarter 3 as the purchases budget in quarter 3? Purchases budget in quarter 3. Purchases of raw material of quarter 3, 64,000. How about quarter 1? How about quarter 1? Quarter 2? Quarter 1, quarter 2. We are almost there. Is it? No. I want to first of all think. Then I tell you what to do. So at least someone is thinking, right? Someone has said, let's first of all get material usage. Once we have it, we now divide it for the proportion given there. Okay. They are at least trying. How about you? I want you to try before I give you the concept. You first of all try, then I give you the concept. That will help you understand it so well. That will help you understand it so well. That will help you understand it so well. Someone was getting 315. How are you getting the 315? There's someone who was giving us another view. If somebody was getting 315, can you please just type down there? How did you arrive at the 315? Remember, sometimes they say majority will not always be right. Right? So there's someone who got 315 somewhere. How did you arrive at the 315 as the total purchases for the entire year? 15. So it was 320 minus 5,000. That is the closing raw material. Remember, they talked about material usage budget for the entire year, right? What will be purchased? Remember, we said it is not always that whatever you are going to purchase will be fully utilized. Yes, we have 320,000 as the total material usage budget, which of course we intend to be purchased. But out of that, at the end of the year, out of the 320,000, 5,000 will not be used. It will be closing stock. We are remaining with 315,000. So can you now go back to the proportions and use that 315,000 to give me purchases budget for Q1, Q2, and Q3? So what is our purchases budget for Q1? What is your purchases budget for Q1? So use 315, not 320. 94,500. This someone is getting something good. How about Q2? Use the proportion given for Q2, multiply by 315,000. What are you getting? Somebody. 157,500. Use the same to give us purchases for Q3. Use the proportion, or in other words, take 315,000 minus this, 63,000. So whoever got 315 was actually correct. That was the correct thing. Sasa leo majority wameuma nje. Majority leo wamefanya nini? Wameuma nje. Good. Now, we add two unknown items. We could not proceed. But with now purchases budget, we are good to go. We can start from this other side, or we can start from here. And let us see. So, for you to get 94,500, you need 63,000 plus X minus 10,000. What is the value of X? Or what is the closing stock in Q1? What is the closing stock in Q1? Why don't we multiply by price per raw material? Now, the question says, give us purchases budget in kgs and also in value or in shillings. I cannot get the value before I get the quantity we are supposed to purchase. So once we are done with this purchases budget part here, we will take now that, multiply by purchasing price per kg. So tunaenda hapo. We are getting to that point, don't worry. We have material usage budget, what you intend to use to do the production. But from that, there is intended closing stock. This will not be used. Walinunua lakini hawatatumia. Or it is here as raw material, the closing raw material. It will be there. If they get any special order, they'll be able to use it. The same way we are transferring from the sales budget. You look at sales budget, right? Less closing stock, then, add the closing stock less opening stock. That is it. So as you do your sales, this one is intended closing stock. It will be there. It will be there. Good. So what are we having? 41,500. I'm told this one is 41,500. Okay. Now the closing stock in Q1 will be the opening in Q2. Right? And we get now the closing in quarter 2, closing in quarter 2, we only have one unknown item. So 76,500 plus X minus 41,500 should be equal to 157,500. What are we getting? 122? 122,500. So this one will be 122. 122,500. So the closing of quarter 2 will be the opening of quarter 3, 122,500. Is it true that when you take 84,000 plus 105,500 minus 122,500, you are getting 63,000? Is it true? Is it true that when you take 84 plus 105 minus this, you're getting 63? Perfect. Now, the closing of quarter 3 is the opening of quarter 4, right? So can you go ahead and now try this? 96,500 plus 5,000 minus 11,500 should give you 0. Is it giving you a 0? Is it giving you a 0? Perfect. Now, I want to confirm that your friends who sat for this paper, but before I give that comment, so we now have purchases budget in units. And purchases only happen in quarter 1, quarter 2, and quarter 3. Can we get purchases budget in shillings? We must get purchase price, kg. Were we given different purchase prices, or we have the same purchase price over the 3 quarters? Which information is giving us the purchase price per kg? Information number 5. The purchase price in quarter 1. Purchase price in quarter 1. 2 shillings per kg. Purchase price in quarter 2. Purchase price in quarter 2. 3 shillings per kg. In quarter 3. Purchase price per kg in quarter 3. 4 shillings per kg. Can we now go ahead and get purchases budget? Purchases budget in shillings. So when you take 94,500 by 2, what are you getting? Is it 189,000? Okay, so 189,000 shillings. 157,500 by 3. 157,500 by 3. 472,500. 472,500. And finally, can you take 63,000 by 4? Take 63,000 by 4, 252,000. So this will be 252,000. There was no purchases there, so we have 0. We have 0. Perfect. We have fully answered the question. Sales budget, production budget, and purchases budget. You are not having labor, so you don't have something to do with budgeted labor cost, budgeted labor hours. Then again, you are not given something to do with other expenses to be able to come up with budgeted income statement. So I want us to go to another question. Of course, time will not allow us to complete it. Our next question, even if you're going to introduce us as at now, it must have now budgeted income statement. You want to see how that will now work out. And for your information, this is the most complex question under functional budget from 2015 to date. Yeah. And it was there in the last sitting. So you can imagine what those people went through. It is the most complex. It required someone who sat down and read. Not just reading, but understanding. Yeah. It was the most, or it is the most complex question under functional budget from 2015 to date in management accounting, you are to think outside the box. You have to look at possible ways of actually arriving at the answer. But having understood, having managed this, then there's nothing that will deny you the 3 marks under this question. And of course, since it was tested again in August 2025, we are eagerly waiting for something under cash budget. If they have to repeat this topic, we are waiting for something under cash budget. So my next question, let me see the summary that I shared with you. We must have a functional budget with there's a nice question from ATD. Is it November 2020? Is it November 2020 ATD? It should be having income statement. Income statement. Let me confirm. November 2020, no. There's one that's having income statement. Budgeted income statement. We should be able to do one from ATD. At least to balance. Budgeted income statement. Budgeted income statements. Is there someone else been able to identify it? Functional budget. Budgeted income statement. Let's see. You can pick it from CPA then. From CPA, we have one under 2021. The last part of the question, you must prepare budgeted income statement. The last part of the question, CPA December 2024, question number 4A and C. Okay, let's see if it is there. Question number 4A. No, not that one. Give me a minute.